We are live, ladies and gentlemen. Aitx came out with its most recent 10Q. We're going to go over the balance sheet, go over the revenues, all that good stuff, and we are going to look to see if the dilution has been trending to the downside year over year. Because if you guys recall, the CEO did say dilution is trending to the downside, and what did I say? I said I'm going to call him out on it because we will be looking at those Qs and those Ks. Let's see. Let's start here with the balance sheet. The assets did increase, if I recall. I already read through this yesterday, but I was like, I don't want to make a video late at night. I'll get it done in the morning. So here we are. Cash increased fivefold from February 29, 2024, August 31st, 2024. So cash increased by 5x, 105 to 540. That's like the first thing that I noticed. I was like, hey, their cash went up, but let's see. Where there's another total current assets increased by 400k, more than likely because of the cash. There was another number here that revenue earning devices increased by 1.2, about 1.2 million. Total assets again. This is nice to see because for the longest time the liabilities of AITX were going up a lot, but the assets were staying flat. So it's nice to see that we're headed towards 10 million in total assets because it did increase here. 7.6, 9.2. Again, I'm rounding. So that was a nice increase there. You would love to see assets start to trend to the upside because liabilities are literally 8x as much as the assets. Let's see, loan payable stayed about the same. Vehicle loan, I don't think I've ever seen this. Vehicle loan current portion. I've never seen a vehicle loan. What is Steve Reinhardt's borrowing cars for his travels? That's the first thing that went through my head. That's not a big deal though. I've never seen this. I think in any other balance sheet. Total current liabilities. What? No way. So total liabilities went up by about 7 million. So like I was saying, it liabilities tends to go up a lot more as expected for a company that needs to dilute a ton to stay afloat. But you guys just wait till we get to the G&As, the general and administrative costs, because I was doing some math and I'm like, oh boy. Yeah, stockholders deficit doesn't matter. If they liquidated everything, we wouldn't get shareholders wouldn't get anything. They wouldn't get squat. Revenues. Okay, revenues. Revenues increased. Again, I'm rounding by a million compared to last year. 1 million increase. Purchases and overhead, like that went up from 89k to 544k, rounding it up for 545k. So there was a nice little, what, 5x? No, not 5x. Would it be 5x? No, 5x would be 45. Yeah, so 6x. 6x increase in purchases and overhead. Cost of goods sold. You know what's interesting is if you look at the cost of goods sold of last year, the COGS of last year, 200k versus revenue of 386k. So we saw a jump in revenues by a million. Gross profit, wait, no, not gross profit. Cost of goods sold, 784,965. That's not a problem, okay? The cost of goods sold is not a problem right now. I'm pretty sure as revenues increase, cost of goods sold, I would hope, doesn't go up exponentially with revenues. It shouldn't, because it's a leasing business, not a you purchase my thing and that's it. So people pay a monthly subscription. So we shouldn't see cost of goods sold skyrocket with revenues. At least I hope not. operating expenses. So here's where it gets ugly, and this is the first time I don't know if I've noticed this before or called it out before. Research and development. Okay, so I don't care if you're putting money into research and development. That's cool. I don't care. That's not a big deal to me. It's the general and administrative where this thing gets destroyed. Because this is operating expenses, and you look at the G&A, the general and administrative, and you can see right here. Let's round this up. So this is 2.3 million and 2.3 million. It stayed about the same. The general and administrative operating expense has stayed at 2.3 million compared to last year. But the problem here is the revenues are 1.344. So your cost of goods sold is half of that, and then you add in the G&A. The general and administrative is 2.3 million. Like that's already double, almost not double, but a million more than the revenues. So when you start combining the cost of goods sold with the fact that general, just G&A alone, just general and administrative alone is more than the revenues. So I wonder in the future if that's going to change in any way, or is G&A going to stay flat? I don't think so, right? Because if there's a surge in demand, it will get to the point where they're going to need another factory, AI warehouse, whatever they want to call it, production facility, whatever they want to call it, whatever name they want to give it. They'll need another location to create to have make get this done, to get those machines out there at some point. They will need to. You can't have just one Amazon warehouse if you got so much demand. You just no, you'll never be able to fulfill all the orders. So they're going to need more people, which leads to higher general and administrative. So that's a big one right here. If it weren't for G and A being this high, we would start seeing profitability sooner. But it's going to be a while because once you add in all the other operating expenses, you can see total operating expenses 3 million. And loss from operations, well, at least it's coming down. I mean, we're slowly headed towards profitability, right? As to be expected. So, like I said, as they get more devices out there, I would imagine we start to close that gap. But G&A is like that's the one that caught my attention. I'm like, man, that's quite a bit there. Where else? The dilution. Let's go on dilution. Where's the dilution? Ooh, whoa. Let's see. Yeah, look at that. By the way, last year shares outstanding 6.5 billion, and then obviously 11.18 billion. So they diluted quite a bit, as you can see. Like what, 5 billion? Surprise, surprise. So here's where I'm gonna call him out on that bold faced lie saying that dilution is trending to the downside. I don't see any trend to the downside here. And we're never gonna see trending to the downside does not equal share buybacks, just to be clear. They'll still be diluting, it'll just be much less compared to previous. So what is this? Is this it? This is 2023. You can see issuance of shares, common stock shares, 280. Okay, 280,000. Okay, let's round it up. 281 million. What am I talking about? 1,000? 281 million in issuance of shares in 2023, just to be clear. And then here, issuance of shares, almost a billion, 903 million. All right, you see what I'm saying here? 903 million. Which, of course, you would imagine brought the outstanding shares up to 7 billion. Yep. Okay, so that's 2023. We go to 2024 and let's see if dilution has started trending to the downside. So we should not see a number higher than 900 million. We shouldn't. Because if it's trending to the downside, we should see less dilution. We should see a smaller number. Okay, Mr. Steve Reinhardt? I don't think he's watching this, but unless I'm reading this wrong, which I doubt. Okay, so issuance of shares 2024, 1 billion.